Hi, and welcome back to the European VC, the go-to podcast for everything European VC. If you love the show, share it with your friends and join our newsletter at eu.vc. Today, we have a very special episode recorded live at the SuperVenture event in Berlin. This episode features two well-known voices within the EUVC podcast, Chris and Joe from Isomer Capital, who have recently just announced their Fund 3. And now, some words from our beloved sponsors. How are you currently reporting to your LPs? Is fund administration taking hours? Are you getting lost in spreadsheet version control? Well, Flow solves all of these issues and more, allowing you to unlock the power of your fund's data by consolidating your work streams onto Flow. Book a demo to learn about Flow's portfolio and fund management features and transaction infrastructure at flow.io/VC. flow.io/VC. For investors looking for capital, the UAE has become the hub of choice for VCs to connect with startups, sovereign wealth funds, family offices, and fund of funds. This October, join fund managers representing over $500 billion of assets under management from CVC, General Atlantic, Techstars, Sequoia, Speed Invest, MEVP, and more, who join Expand Northstar to connect with hundreds of early-stage to growth startups from all markets through a curated concierge-style meetings program. Previous participating founders hail from Stripe, Binance, GoOne, Byju's, InterSwitch, Caro, and more. Register now at expandnorthstar.com/EUVC.
All right, everyone. Welcome to this very special episode of the European VC. We have huddled up with Joe and Chris from Isomer Capital in connection to your very new fundraise. So everyone, we're in for a very interesting episode here because we're going to dive deep on Isomer Capital Fund 3 and what the announcement of that fund means for the ecosystem.
Super nice to have you, Joe. Super nice to have you, Chris. As usual, nice to meet you in person as well.
Good morning.
It was nice to see you yesterday at SuperVenture at the VC party. Super cool to see the whole ecosystem together, see the Isomer team as well. That's very nice. So let's start with the basics. Isomer Fund 3. Give us the quick rundown. What is that about? What should GPs out there listening in and even other LPs know about that?
Well, we're really excited that it hit the news yesterday, coincident with the biggest, best SuperVenture conference ever so far. So big it has to move to a new venue next year. Isomer 3 follows the successful strategy of Isomer 2. We continue to back a range of Europe's exciting VCs, to co-invest with them, to buy secondary pieces of funds and companies. And part of what we're excited about is, and thankful for, is our LPs supported the launch of the fund about 4 months ahead of schedule. Yeah, and that's exciting, but also evidence that Europe's best GPs continue to move fast. There's been some great returns created with many of our partners, and so their funds launched quickly and raised quickly. And so part of the reason Isomer 3 raises now is to support them. So in fact, the fund has very quickly completed its first 4 investments, working on the next 3 already.
It's a weird market right now. I know we hear a lot of GPs unfortunately having to postpone the fundraises or just really having a really hard time. And it's been a few years for Isomer now. That's exciting. But I'm really curious to ask you looking back, right? As an entrepreneur, as a fund manager, what do you think allowed Isomer to build a platform to the state where you are today? Because you are a different beast today from what you were when you started, right? A very different beast, and the whole operation is different. So I'm really curious just to kind of try to tease out some learnings from building that platform as a firm as well.
I think we continue to remain to be humble. I think we have to remember who our customers are, and there's this funny thing in our world where the customers are our LPs, and of course, we are in the business of making money for them. But our customers are also the people that make the money, which are the entrepreneurs and the VCs, and remembering that and having processes that make that happen are really, really important. And so it's just being focused on that, that customer ideal is really important. We communicate frequently with our LPs so they know what's happening. We continue to strive to be the best LP for early stage venture. And that's tough because there's lots of them. Joe just mentioned that SuperVenture is now so big, there's a waiting list to get in. Yeah. When Joe first started SuperVenture, it was a couple of hours sort of by exception at Super Return. And now it's this sort of 3-day conference where the first day you can't get into. So so the challenge is always to be true and honest and transparent to the GPs that are coming, and there's lots of them, and we pick relatively few. But just doing that in a process that everybody understands and that we're clear is, I think, the secret here.
And I'd be very curious to double down on that exact thing, which is not how you pick, because we've spoken quite a bit about that. I think people can both go to your website and also go to EU.VC by now to understand pretty much how you think about managers. But there's one question that haunts every manager in Europe, and that is the fundraise status of the fund of funds. Mm-hmm. Because you guys are everywhere, Isomer is everywhere, Equation are everywhere, EUVC everywhere with their messaging. But then there's quite a few managers at the same time that also experience, not maybe that much investable capital right now. Both, how do you see the market? And also, how do you tackle that yourself? I think everyone needs to hear more about this from the fund of funds that we have.
Yeah, that's a big question. It's a big market. And I'm still recovering from David calling us a beast. But
it was meant with a lot of fondness.
A lot of love.
You called us the beast?
I said you're a different beast today from when you started.
Yeah, okay, fair
Good
enough.
Lord.
That might be a different
Well,
beast.
if I could just comment on Chris's point as well, I think what's been very consistent from the beginning of Isomer to now, and what we keep working on really hard, is to be a good partner. And we talk about that a lot, but what does it really mean? It means being a good partner to your VCs, that when they need you, you're there. We run the extra mile in all kinds of cases that will never be in the news and we'll never talk about. But if you're really supportive, that's what you got to do. And we continue, and we don't always get it right. But keeping in touch with, I think our database now is more than 1,300 VCs that we keep in touch with. All our VC firms all around Europe. That's a big job. So we keep adding 2 or 3 people every year to meet that mission, which keeps growing. But then to turn to your question, Andreas, being a good partner to LPs is also quite important. So, when we first meet LPs, part of what we're doing in a discussion is to pitch them. Hey, we have a fund, we'd love you to invest in that fund. But a big part of what we're also doing is saying, what are you trying to achieve by investing in European tech? And can we be part of that? Can we help you with that? And what we've found over the years is that there's a range of missions. I want to diversify my portfolio. I want to make returns, of course.
I want to understand Europe.
I want to understand Europe. I want to look for specific things that you as a scout could help me understand. I want to invest with you, around you, side of you, co-invest with you. So we've, sought out, probably by our nature and by what we're trying to achieve, we've attracted around us a range of LPs who also have a mission. And we're playing our role in the marketplace. Of course, our role evolves, and so does theirs. So we have LPs now from many different countries, of many different types. And I think you're right that the ecosystem now, because we've had public market correction, because interest rates are up for all kind of reasons in other parts of portfolios, a lot of LPs are pulling back this year. And you see that by LP type, right? So for example, in times where maybe, I don't know, just to take an example, if endowments need to add more to the operating budgets of the universities, then they'll maybe commit less that year, right? So if all your LPs are endowments, well, you're correlated to that. And for better or worse, we have a very diverse set of LPs. We've had to travel far and wide to find them. But the upside of that is that when we come to say, hey, we're going to raise a new fund, what do you think? They're very different in their thinking. And they span family offices, corporations, foundations, governments. We don't say it often enough. We try to, but we're so grateful to them to be on this long-term journey with us. So we're not pushy about the new fund, but with the new fund, we just said, hey, there's some GPs really moving. We got to run to support them. Can you run with us?
We're probably overly transparent with the GPs about where we are in our fundraising. And this isn't a market broadcast. This is a communication individually. So, you're always trying to manage this, when do we have our close, when do we have capital available, and when we can invest. We're super transparent, sometimes I think too transparent, about where we are and what we can do, We worked very closely with these four VCs that we've just committed to from this new fund to say, now here's exactly when we're going to be having our first close, our second close of Fund 3 to match their commitments. And that is the thing that I would wish everyone does.
Yes, because that was exactly the question I was about to ask. Because yesterday at SuperVenture, I was talking to a GP they're raising, and we talked about, this was one of the other fund of funds, and he said, well, it looks like that they'll have money, I think they're getting there by the end of the year, and then I think it was like he was really hoping that LP would have money by then, and kind of then also not assuming, because he didn't know really if he was well positioned to get money from that LP. Yeah. But that LP had definitely given him the impression that he liked him a lot. And I said to him, well, do you think that when there's money that you'll then, are you number 3 in the line or you're number 20? And he didn't know, right? And I'm always like, how does a GP navigate that? And how do you as an LP, because you also have a huge, line of people that wants your capital. And I know some that for sure have said, well, I'm looking forward to see when Isomer has the capital to deploy into my fund if they like me. And so it's something that people always think about.
When we have these conversations about exactly where we are when we come in, the first thing to say is, as the GP, as you've just noted about GPs, is exactly the same for us. We never know precisely when LPs are going to come in. We don't have an agreement 6 months. Would you please come on the 31st of March because we need that for the first 4. This is a moving. So first of all, there's always some ambiguity from our point of view. But we're not having discussions about where we are and precisely when we could join, as best we can tell, with managers that we have not decided to invest in. And that's the important point.
And I think just to double click on that for everyone in the audience, because I think that's so important, that, and it might sound basic, but until you have that commitment from the fund, you don't have that fund, and you would also go to the length to say you should not then be praying too much for that fund's close to come, for that to then unlock a capital for you necessarily.
Well, I'll say one more thing, and I'm sure Joe has good points on this too. It always surprises me in GP conversations why they don't ask those questions. Yeah. They very rarely, they say, oh, it would be great to, I had hundreds of conversations yesterday, I'm sure you did too, Joe. Oh, it would be great to catch up. What they're really saying is, are you interested in me? Are you interested in investing? But it'd be great to catch up. And, and for those that to be honest, those that we're not sure of, and we're still trying to figure it out. Remember, we're doing this, Joe talked about 1,300 managers. We're trying to get it down to some single-digit number this year.
Yeah. I'm smiling as we talk because ever since the very first days of Isomer, I recall myself saying, and still saying, I'd love to invest in your fund, but I don't have any money. and I think, we're GPs and they're GPs. And so just being straight ahead and saying, look, we're trying to put a close together and we're working with a group of LPs, it's exactly what we're all doing. So in that sense, we're really on the same side of the table. But, you raise one of the difficulties of our kind of fund, Andreas, which is how do you build a pipeline, match up the timing on both sides of the table, and we're constantly trying to understand the real timeline from VCs, and VCs are constantly trying to accelerate the timeline by telling us it's closing tonight, and we have so many times over the years where, it's the final close next weekend, and 6 months later it's still open,
and that's let's just, because that's a tactic, right?
Yeah.
How do you as a fund investor think about that tactic? Would you ever have been about to commit to a fund or even have committed to a fund and then feel like they're pushing too hard, they're being intransparent in their process, making us feel like there's FOMO around the thing, and then at some point you've said, guys, don't play those tricks with us. That doesn't...
A little bit, but I give both parties, us and the GP, this mythical GP, credit for, by the time we're saying, look, actually, we would like to do this. Let's and when, what is the biggest decision that Isomer makes about a GP? It's actually, are we going to spend detailed, dedicated time to really understand, to write an investment memo, to propose it to the... That decision is the decision. And the rest is ensuring we've understood properly, that there's nothing, in all the referencing is not, there's nothing that comes out. But that is the time commitment decision. And I think if you've made that decision, it would be very disappointing if you were being gamed to the extent that we're closing tonight, but actually it's 6 months. Do we get gently gamed? All the time.
Well, I'm really cranky about that because we sort of bare our soul.
Yes, this is my point about being too transparent.
As you say, we're probably overly transparent. Where we're trying to be super straight ahead. Here's where we are. This is the process. Blah 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 blah. So yeah, when you get on the other side, this kind of fake urgency, and it seems like real urgency. So we do our normal thing. We run hard and try to meet the timing that's being asked of us, and we really work hard for that. And then if you understand later that it was a fake urgency, that really leaves a bad taste in my mouth. I don't like that.
Because it messes up your shop.
We've gone through some trouble and pain to meet it, which, I don't... It's fine to go through trouble and pain to meet it when it matters, And that's and the same when it matters for us, we're saying that to our LPs.
Joe is fond of saying, when we're doing our fundraising with LPs, particularly new LPs that we've just sort of met, and we're trying to decide whether they're interesting or whether we're interesting to them, the second best answer is no. Because, the quantity that Joe and I and the Isomer team, and in fact everybody in our business has that is so valuable, is this thing called time. If Isomer isn't, interested, then we should say so, because that GP needs to get on and go work with those that are.
And could I ask you, because I get pinged by people saying, they know that I like them, and they know of our relationship.
But you like everybody.
I do like quite a few, but I think that there's also some that know that I like them less. But then they ping me on WhatsApp saying, could you check with the process with Isomer, where we're at, and I'm like, more than happy to, but why don't you ask them? Because it's not like they're not gonna commit because you asked them for the third time over 4 months where they haven't really been moving their process with you. Where are we? Is this still happening, or that we haven't touched base for a couple of months? Does that mean that I'm out? Is that how I should translate? Is that not perfectly okay? Is that
Yes,
GP
absolutely.
not just...
Absolutely. It always impresses me when, occasionally we will meet a very mature manager that might be still doing early stage, but on their 6th and 7th fund, and they know what they're doing. And if you have an hour slot with us, 50%, in other words, 30 minutes is spent interrogating us. And then they get on to explain what they want to talk about in terms of their fund and stuff like that. It's perfectly...
But this is natural when you're a new manager or a new founder of any business.
Yeah.
You're in the beginning, you're putting it together, you're creating it. So you're naturally in broadcast mode.
Yeah.
So when people first, even before they form a fund, right? A lot of people come to us and say, now don't tell anyone, but I'm spinning out of big firm X, or I'm leaving company Y, or whatever. Say, hey, they're totally in broadcast mode because they're thinking through their ideas as they talk. So to take the next step, like where are you in your project? I mean, that's not even on their horizon. That comes later. But you're making me want to go back and talk a little bit about the difference between I like you and I'm committing to you. Yes. Because Andreas, you keep saying I like you, or he likes me, and is he committed, right? And there's a long road between I like you and I'm committing to you. And boy, I wish we could commit to everybody we like. Yeah. We can't. We have a finite capital. We have a finite number of portfolio slots. We have a portfolio construction, which, by the way, every GP ignores and forgets. And, they just look to us like an ATM. I'm going to go to the Isomer ATM and take out some cash. It's not like that. And so when you first meet GPs, what you're really liking is the idea, the strategy. Hey, I've got this focus on deep tech. Hey, I've got this focus on Eastern Europe. I've got this focus on consumer, whatever it is. You're first liking and finding some alignment on the mission of the fund, the strategy of the fund. You're then finding something exciting about the team that's executing that. And you can like all of that, but you can also then realize, there's quite a bit of overlap in the portfolio companies with a fund we've already got, or a couple of funds, right? So we turn down sometimes really great funds, which is painful and I hate it, but really great funds simply because half their portfolio is already in ours, through other managers.
Or their whole strategy is represented by a manager that we really like and is performing.
That you really like?
Yeah, is performing well. Well, exactly. We really like.
But it's more than like. It's like strategic fit, due diligence, and then commitment in portfolio slot.
We've been talking now for how long it is, and I know you're meant to be asking us the questions, but I want to make a comment about SuperVenture. The day started yesterday, on June the 5th, with a presentation from Adam Street, and it was very impressive. Europe essentially is beating the US from venture capital returns, and that is a remarkable thing. So anybody that's listening to this, that is a GP, should be remarkably proud of their contribution to that statement, because that makes our job easier. It makes it easier for us to be able to go and convince, as Joe says, LPs far, we go to Japan, you go to the Middle East, you're going to the US, to broadcast this message that Europe is really where it's happening.
And I want to build on that and come back also to the topic, the core topic here, Isomer Fund 3.
Yeah, and if I could just interject there and say, this episode, we announced to all of you in the beginning we're going to talk about Fund 3, and as always when we're with you guys, we end up diving really deep into fundraising and how does everything work. And so everyone who was hoping to get that whole Fund 3 strategy lined out and all that, sorry guys, we dove into a rabbit hole as we always do. But sorry, go down.
No, but before going there, I think it's just interesting also, as you guys said, the timeline of this fund, right, it coming earlier is obviously a reason to be proud of, but I think it also shows what's happening in the underlying funds that you're investing in. And it goes to that point of Europe is quite interesting and awesome right now, right? The market might be weird, the market might be kind of tough to fundraise, but some managers are moving quick. That is exciting. So I'd love just to ask kind of what are you seeing on happening on kind of your winners, without necessarily naming funds, of course, but just what are you seeing and how, what is like the feel that you're getting from the market these days, also just from the portfolio?
I think the best managers are raising exactly as they've always done, potentially even faster. I mean, that's just the reality of it. That's the fundamental thing that made us raise Fund 3, you know, many months before we had planned. Because these guys go out, you know, they have a set of LPs who have got very comfortable with them as managers, very comfortable with their returns, and they are re-upping. You know, there's this wonderful thing about venture. If you want to do venture, you have to do successive vintages to catch the sort of the ups and the downs, you know, and sort of, you know, people would have absolutely invested in 20 and 21 and 22, and now they must invest in 23, 24 to get the sort of the swing of this, to get that overall average performance, which will be very strong.
Another way to say it would be what's going on underneath. Well, great companies that continue to be founded, and they need capital. And so these great managers are running their funds to meet that. On the LP side of things, if you read LP literature over the last 20 years, you will find the Yales and the Cambridge Associates and all of the kind of masters of the game tell the same thing. You cannot market time. You cannot, as an LP, jump in at a period of time, 2021, because everything's going up, and think that longer term you'll have better returns, you know, investing in a period and not investing in another period. And it was underscored on a panel I did yesterday with 4 long-term professional LPs, and they all said the same thing. You must commit evenly over time, and maybe there's tactical moves up or down on occasion, but that's how this long-term game works. And, you know, it's always, what's that saying? Every overnight success was 10 years in the making. Yeah. And that's very true, that when you see a company go really large, well, actually, the real investment in that happened 5 to 10 years earlier to get it moving. And then it comes onto the popular imagination and radar when it hits the cover of the FT or whatever. But actually, you know, what we do is back that thing 5 to 10 years earlier, when it's, I always talk about 2 guys in a garage, or, you know, it's not necessarily guys and it's not necessarily guys, a garage. No, exactly. But it always starts with, you know, 2 to 4 people with a big idea. And so if you're really investing in early stage, you need to do so consistently over time. And that's really what's going on with these strong managers raising, supporting good founders, and looking to groups like us to continue our support.
You know, the exciting thing, the really exciting thing, the thing that gets Joe and I up each morning, I'll speak for him on this subject, is that no one's told the entrepreneurs that there's a slowdown. They're still building new things, building new ideas, you know, because there's so much still to solve. The amount of digitization that is really done in any of the economies and industries is so little. There's so many challenges to fix. You know, that's before we start talking about the important topic of climate and all that good stuff, that people are just continuing to build, and the best managers know that, and they need to support them and want to support them.
I feel we're in a strange moment in the market, because we do hear a lot of talk of doom and gloom, and public markets are down, so anything you IPO'd over the last year or 2 is really down a lot. And, you know, how do you get out? There's a lot of talk about that, you know, in the market, but in the conference as well. But I make the distinction between what's going on in capital markets versus what's going on in the operations of companies. And what Chris is saying is the companies in our portfolio that are growing and building are doing extremely well, because customers are buying their products. They're building strong products that are needed. So it's very odd moment because you talk to the entrepreneur, they're doing great. Revenue's up, customers up, not without the normal problems of building tech companies, but that's a positive upward trajectory broadly in Europe. At the same moment, you have capital markets, which is very different. And when you talk to the LP world and talk at SuperVenture, what you're really getting a read on is the capital market side of things. Well, I'm worried about interest rates. I'm making, some LPs told me in the US, I'm making 5% on cash. That's pretty good. Why should I commit to illiquid long-term stuff when I can just, do some fixed income things? And so there is this trade-off within the capital market. However, we had our annual meeting a few weeks ago. You did a beautiful interview with one of our founders and one of our VCs, where they told the weird and wild journey from trying to fulfill the first customer orders and having to do it themselves to building a team, almost going out of business, getting a bridge round, all this. And it reminds you that actually the business of building great tech and great companies is not really a business of capital markets. It's back to customer, product, the basics. And that's going really well.
And one truism, whichever market, but it's particularly true of here, when that company, which is a company called ZenJob in Germany in the temporary workplace, tells that story of how he goes from nothing to a revenue of 100 million. There are 10 people who are going to say that and say, I can do that. And it's just this pyramid that happens, which is why we're so excited about Europe, why we're excited about Fund 3, because there's going to be, as there always has been in Europe, remarkable things to invest in that we'll get very excited about.
Well, and they're at better prices now than they were 2 years.
This is just like a stock market, right? I mean, sort of the price is down. It'll go back up again, and we'll benefit from that, and we'll lose from that, and that's the business we're in.
Well, one person's market correction is another person's return to prudence.
Yeah,
and
exactly.
I'm really happy. I just complained about capital markets, but the flip side of that is we're back to you have time to do a proper due diligence. The terms are being negotiated in a prudent, normal way. Generally, the pricing is more connected with operations of the company, and that I'm comfortable. I'm happy, really excited with the capital going.
Remember, on the co-investment side, we decided we wouldn't do any investments over 10x valuation to revenue, and at the time, in 2021, everyone said, "Well, that's crazy. You're not going to invest in anything." And we found it.
And for quite some time, we didn't.
And it turned out that we didn't have a crystal ball. We didn't know what would happen in 2022 or 23, but we knew that it was sensible to worry that it will happen at some point. Yeah. And that's just the advantage of being old.
And experienced.
I have a question because I obviously know this being a venture partner with Isomer, but I think that in Silicon Canal's coverage of the fund launch, there's something in there that, for reasons that elude me, was not covered and Sifted as an example, which is that in the predecessor fund of Fund 3, meaning IC2, you're actually top 5% globally. That is not something to just, I think, both on a firm level, to just go over quickly, but also because globally, well, and you're exposed only to Europe, well, that also automatically tells a story about Europe. And I'd just love to ask you to comment a bit on that. What do you think allows you to be in that very top bucket?
That's in the toot your own horn, which we're sometimes not so good at. But Isomer Fund 2 is performing extremely well. If you unpack why that is, there's really a couple of main value drivers. The first being many of our GPs have moved quickly. So they've gotten out of their J curves, they've generated profitable growth within the companies, including a bunch of early exits and cash that has come back. So, give all credit to them. At Q4 numbers, there were 11 GPs in that category that were clearly out of their J curve. Now, just to be clear, Isomer 2 is not yet 3 years old. It's coming up to 3 years old. And so what you would expect at this point in time is that the fund is maybe a bit negative, in a J curve time, right? Because you're paying out capital going into companies, you're paying out fees. But in fact, due to the investing in some aged primaries, some funds that were already in motion, plus just really great GPs. I mean, we're fortunate to work with some of the best. We have a lot of profitability there. That's also been complemented by some great secondary transactions we did. So when we invest with VCs, what we're also saying is, look, you don't know what's coming down the road, and neither do we. But in difficult moments, if an LP needs liquidity, needs to leave, if a founder needs to leave a company, give us a call, because we would be interested to buy those pieces. If we're already around the table, we know the company, we know the fund, whatever, we're interested. And so that's happening more and more. We're doing quite a few of those. And it's a way of buying more of your own cooking, in a way, right? But you tend to buy it at a discount.
But it's cooking we know.
It's cooking we know. We like the taste. And so, but what a dream, right? If you're already working together on something, and one of your fellow co-investors says, hey, I've got another project, and this, a couple of real stories. I've got another project I need cash for. Okay, well, can we buy half your stake, or can we, and so that becomes an early driver, particularly when you're buying older assets. So one thing I love doing is, let's say we're invested in, fund X of a GP. If we can buy fund X minus 1 or X minus 2, those funds are maybe 4, 5, 6 years old. So you can see the companies are growing up, they're starting to exit. So if you buy those in a secondary transaction, they really help your cash flow, because you get some early cash back. They help the velocity of investing in the fund. So that's, in Isomer 1, that's been a powerful effect. In Isomer 2, that's working extremely well. So the net IRR of the fund is very high. I'm not sure if I should broadcast, but if you were running a direct VC fund, you'd be really happy with this number. Yeah. I mean, and that's what we're trying to do at Isomer. Fund-to-fund diversity and low risk with direct fund performance. Yeah. And so far, that's working.
And, this speaks to our ability to really partner with our GPs. A GP who says, well, we've got some LPs that would like to move out of a fund that you're not even in, but we've backed the manager. We spent our months validating the manager. That's really quite special, because we're then able to do something rather unique, and that is, because we did all the DD on the prior fund, because that was the fundamental data point to get us comfortable with their investment style, how they do things, and how the processes that we put into the decision, we can do this relatively quickly. Yeah. And that is a very, very valuable asset. It comes back to this very precious thing called time.
Yeah. I want to take the chance to kind of wrap up, because we are running out of time. And I think it would be just beautiful to end it on the quick rundown of Isomer Fund's 3 strategy. Because I think, many of us might have listened to it if we're regular listeners. We can check the website too, but it's always nice to hear it from the source and just have that as the wrap-up of this conversation. Joe, would you please?
Sure. Isomer Fund 3 does 3 activities. It invests as an LP into early-stage funds all around Europe. It co-invests directly into companies alongside them, and it buys pieces, secondary pieces of funds and companies, also with the same GPs. And the mix it does that in is about 2/3 of the capital into primary fund commitments and 1/3 into what I would call opportunistic, so co-investing and secondary investing. The core positions in the fund is about 20. And this is hotly debated. Should it be less? Should it be more? There's no perfect number, although there's historic portfolio theory. However, we're trying to balance the agenda of covering Europe, having eyes and ears everywhere, increasing our shots on goal, in other words, our probability to get the next great unicorn outcome whether that's in North, East, South, or West Europe, that's a big job. That's a really big job. We have 44 jurisdictions, so you got 20 shots to fire into this very big landscape, right? So it kind of sounds like a big number, but actually, when you go country by country and meet everyone, it's not that big a number. We also have a little bit of adjustment for Fund 3. We have more formalized our micromanager program. So we absolutely love emerging managers. I think that's no secret in the market. We've backed probably more Fund 1s than most, because that's the exciting
And comfortable
moment.
doing so.
And very comfortable. And some of our highest returns are Fund 1s, I quickly add. But why are we doing that? Well, we're doing that to capture new ideas quite often, to capture really highly motivated people as they build their new project. And sometimes they have very small funds. Just, you could almost call them proof of concept funds sometimes, because people test an idea. Maybe it's a sector focus, maybe it's something that's a little different from what they did at their prior firm, and they believe the future direction. So they raise a fund, maybe it's 20 million or something. They later go on to something bigger. But there's a really special moment, we call them micromanagers, which in my corporate career was a negative thing, but now in my VC career, it's a positive thing. And these micromanagers, they're really powerful in terms of new ideas, taking you new places, generating high returns, but also the ability to partner with them. They support us as much as we support them. So we've formalized that a little bit, and we've said to LPs, hey, don't worry, there's going to be up to 10% of the fund focused there. And when you see us making small commitments to small funds, don't worry about that. It's part of this sub-program, if you will. And then our crypto allocation is similar. So I continue to think crypto markets and crypto technologies, blockchain, and I like the picks and shovels strategy. I don't know enough to speculate on Bitcoin and Ethereums and so on, but I'd love to build the tools that allow you to speculate on those things. So we have a small group of focus managers in that, where again, I think LPs are excited to have a toe in that pond, but also diversified, and capped in size. So that's. Am I missing any core bits of the strategy? It's Europe, it's tech, it's digital.
I think I saw in one of the PR pieces 5 to 10 million to established managers, and typically 1.5 or so to the micros.
Yeah, something like that.
And then both of you are saying yes, and then I can see that you're also saying yeah, but sometimes it's it all varies, but these are the main lines.
It does vary, but this is really important to be clear and explain the fundamentals here. The fundamental here, we've made a commitment to our LPs to cover not 44, but 38, 39, 40 countries. And to invest, which is where this micromanager thing is so important, new emerging technology. So our micro program has just done a climate fund. We're doing a sort of biotechnology fund that we just did in Fund 2. So that's we're making a toe in the water in those new technologies with some really exciting new managers, and it's great fun to do that. And that's really sort of important that we do that.
Well, and let's quickly add digital biotech.
Yes.
Not wet lab, not life sciences as historically practiced, but we have computer backgrounds and we're comfortable in that domain. But why this ranges? You're right, Andreas, and we kind of put that out. But there's a couple of key things at work. One is we have an idea that we'd like to be a 10% LP if we can. So if your fund is 50 million, we'd love to put 5. If it's 80 million, we'd love to put 8. And there's no magic of that. It's just being a material LP. But the other part is that, and I get a lot of credit for this sometimes. Sometimes when a VC says, well, how much do you need to invest? Because they've been pushed by big LPs. I need a ticket of a certain size. And sometimes I'm able to say, well, how much do you want us to invest? Yeah. And there are these funny moments where you can see in the eyes across the table, like, nobody ever asked me that. That's really funny. And I'll never forget, one VC said, I just love you for that. Yes. Because you're thinking about me and what I need. And so we flex our ticket up and down, in line with the capital targets of the fund, but also in line with that agenda of being a good partner. Sometimes we're the first investor in and you need a market signal of some sort. Sometimes we're the last investor in and we're just filling the last little gap. And I think the capital being in line with our target, but being a partner and being supportive means, being flexible as well.
We sometimes use this expression, partnership is at the center of everything we do, and we've talked about our partnership with GPs, but we also have a partnership with our LPs, because most, if not all of our LPs invest in us because they want to understand and know about Europe. They want to co-invest with us in companies, in funds. They want to do commercial partnerships, and that's really at the essence. Partnership is about everything that we do.
Beautiful way to wrap things up. Always nice to see you guys, especially when it's in person. And also just adding, it's a pleasure for EUVC as well to have Isomer as a partner. Because at the end of the day, that's also part of the whole partnerships that you're talking about, and we really appreciate that. So always cool to be with you, but more importantly, very exciting times with Fund 3. Congrats.
Thank you.
Thanks, guys. Really fun to talk to you, although this is a very uncivilized hour of the morning. But only for you do we get up so early.
And so little sleep.
On so little sleep, yeah. Thanks a lot, guys, and have a good rest of the conference.
Thank you for listening to this episode of the European VC, the go-to podcast for everything European VC. If you love the show, share it with your friends and join our newsletter at eu.vc.